Alright, welcome to another video. And in today's video I'll be explaining to you order block refinements and how to catch high risk reward with refining your order blocks. So without further ado, let's jump into it. So here are two trades I caught on Euro USD some days ago, few days ago, and these are what 1 to 6 and 1 to what 8 risk to reward, and I'll show you exactly how to catch this in some minutes now. So first, I dropped down to my H4 time frame. So identify my supply and demand zones, and as you can see, this is what the base here that I caught. This is what a drop, base, drop, and it's unmitigated. It's an unmitigated area of supply. So I identified that and I waited for what my lower time frame confirmations. So when price got into this zone, I wanted to wait for a shifting market structure. So we got that here. After we got the sweep in liquidity here and break of structure here. We got the break of structure here. So as you can see, this candle is a very huge candle. This order block is very big. It's about, let me delete this now. This order block is about 90 pips. This order block is about 90 pips. So we don't be trading with such big zones. So for the lower time frame, for the refinement of zones, I dropped down towards my M15 and identified my supply zone. As you can see, with this sharp sweep and what's BOS here, we had this order block on M15, the last up candle before the down move. So you can use this one, but I choose to use this one. Choose to use this order block here, the engulfed order block, where the order started kicking in, and also this imbalance here for the imbalance fill. As you can see, price did not mitigate it here. This was where price mitigated it. So I entered off here. I took a short position here. This was my first entry. What did I target? Structure. You can see what market did. It made the market made a high. It was showing bullish structure here, break of structure here. Then we did what? Then we broke market structure at this point. We broke market structure here. Good. Now the market made a low. The market made a new low here. I'm expecting the market to make a lower high. Now I'm expecting the market to make a lower high. I'm gonna make a new low to take out this old low. To make a new low to take out this old low. But at that point, this whole thing was not here. So as you can see, let me just get about that. Go back to my entries. Alright, so for my entry, I took one entry here. I set a limit at this zone. You can see how sniper this trade is. To the teeth of this zone. So I targeted this low, this weak low. I failed to take out this high. So I targeted that, and this was 1 to 6.13 risk to reward. And I waited for. Then I saw this also. This one I was not on the chart to take. As you can see, it's during Asia. I was not on the chart to take this one. This one was during New York session, so I took this. This was during Asia, and it fits my plan perfectly. As you can see, we have some sort of Wyckoff distribution here. I'm going to be explaining Wyckoff distribution in my future video, so make sure you subscribe to this channel not to miss it out. So let's get over this one. this entry. So this is it, and this was what the last point of supply here that I would have taken short here. Why? Because in this internal structure where we made what we made a low, we made a new high, we took out a low by breaking structure here. We're expecting to make another low, so this is the lower high to make another low. So this is what the last point of what supply if you're using Wyckoff distribution. So let's see, you could use anyone. You could use this order block here, you could use body to body, stop loss above the what, above the wick, or what I usually do is that the high that broke structure, I put my stop loss there. Like this high took out this low, so theoretically the price should not take out this high. The smart money wants to keep on selling, so that's what I did. You put your stop loss at this high, or for the order block you would use the engulf order block here. So you could have taken another entry here, short position at this point, and targeted. First target should be this low for the market to make a new low. You could take partials here or whatever, but overall target is for the market to take the weak H1 structure, which is this one. And you can see clearly how price built liquidity on its way up. You can see the trend line liquidity here that broke and retested and some sort of that. So alright, that's it. I don't want this video to be too long, so make sure you click the like button, subscribe to this channel so you won't miss any of our content. I'll be dropping future videos on how to trade and make good money from forex trading without any problem. So this was the entry. Let me go over it again. Quick recap: we went to the H4 zone for structure, went to the H4 for structure. So this supply zone, this is my supply zone here. So to this week here, as you can see, this week, this is my supply zone. Wait for price to what? Wait for price to come into a supply zone, then wait for what? Lower time frame confirmations. So I dropped down to the what? H1, and price started to shift structure. Here we're going bullish structure, and we switched to what? Bearish. Let me draw that again, sorry. Here it was what? Higher high, new low, breaking this low. So expect the market to come back and break the low again. Simple. So that's what we did here, and to catch it is what? 1 to 6, sorry, next to the word. I didn't take the other one, but that's just it. You could backtest that and see how it fits my plan. Alright guys, with that being said, I will see you in the next video.